You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions tonight, we're Mutooni from Sanlam Investments and Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send your questions through email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV using hashtag StockWatch. Gents, appreciate the time this evening. Let's get into some results that came through. Roy, Investec numbers. We just had an interview with the CFO. I got to say, I thought a good set of numbers. The market quite liked it as well.
No, absolutely. I think these guys have struggled for a long time with a very low ROE, and they're now targeting mid-teens. And for a British bank, a bank that's predominantly British, that's quite a good number. So absolutely, I think quite a solid result and good progress implementing their strategy.
Is, Roy, staying with you, I mean, are they cheap? We look at some of the big banks, the First Rands, the Nedbanks, the Standard Banks, ABSA in particular, and they are cheap. They're on good dividend yields. They're on good price to books. Does Investec kind of sneak into that realm, or not quite?
I think Investec is very specialist. So in South Africa, they've got a very niche market that's probably quite high income, very committed, and they can sell lots of products into that market. So it's probably quite a high return. Whereas in the UK, it's probably one of those mid-tier banks in a very highly competitive space that you struggle to differentiate yourself. So you have to look at it from that perspective. I think when you add it all together, it probably is cheap at these current levels, but you have to consider that in the UK it's not as distinguished as it is here, and there's still quite a bit of a way before they become an established, well-known brand there.
Yeah, absolutely. Hugely competitive market, and as you say, they're kind of mid-ish tier. So, Lucky, your take on the Investec numbers and the valuation it's offering?
Well, look, I thought the numbers were credible. I mean, they did push hard. I think it was a tough environment, but they managed to come through with still quite a decent growth in profits, about 8%, if I'm not mistaken. I do think that it has run a bit hard, but in the last, say, 12 to 18 months. But it may start offering opportunity again. I mean, it will be consolidation for them at this point.
Let's check the other set of numbers coming through. We had Life Healthcare. Of course, they've got the continuing operations because they're in the process of selling one of their businesses. So, Lucky, your take on Life Healthcare and opportunities there. Of course, our healthcare spaces, the hospital space has now shrunk down to only them and Netcare. But Life Healthcare for you?
Yeah, look, I think they seem to be operating very well. I saw the occupancies were close to 70%, but the volume, or at least the paid days, were up only 2%. But they continue to execute well. They grew earnings by about 9%. So I do think that in about 15 times it looks reasonable as a defensive stock. But there may be other counters that are cheaper out there.
Yeah, maybe others cheaper. Roy, your take on Life Health?
Look, very similar to Netcare, paid patient days growing in low single digits is the most unexciting thing to have in the market, such as this, where you probably want to be moving into cyclicals and higher growth businesses. So it is defensive, but at 15 times multiple, I'd be thinking twice, maybe over the longer term, but every time I think about them, I go back to paid patient days being 1 or 2%, and that's completely unattractive.
Yeah. And that's the point. I mean, essentially, they're expensive hotels, and it's the occupancies that matter. And they need to get those numbers moving better. Question coming through. Roy, let's stay with you for a moment. Bytes Technology question is, been having a look. I like the business. I like the idea of earning some sterling. Would you be looking at Bytes at current levels?
Absolutely. I think Bytes is a solid business model. What effectively they are is they're senior Microsoft partner in the UK. And as we've spoken before, once you have Microsoft Office in that subscription mode, you just pay. Nobody ever cancels and then suddenly has to look for anything else. They're a big partner. They've got a big sales force. They're trying to move a lot more into services. They're well respected in that market, clean balance sheet, high returns. The new management team is definitely one that has a great idea of how to grow this business. I think it's one that you should stick with over the medium term.
So, Zwelakhe, your take on Bytes?
I agree with that. I think one area of opportunity is the growing AI consultations and implementation of strategy around those areas. I think they might be a major beneficiary as a trusted IT service provider to many of these businesses. And I think as we've seen, Europe is lagging behind, the UK is lagging behind in terms of the AI space. There may be opportunities as they catch on to that wave.
Yeah, in Europe, I think France has got Mistral. Otherwise, not a lot coming out of Europe in terms of the AI space. A question came through around We Buy Cars. Roy, we had some maiden results recently from them. They certainly got ambitious growth targets. Would you be looking at We Buy Cars at current levels?
I think so. I think it's a solid platform business. If you think of it purely as a used car dealership, I mean, you wouldn't look at it twice. But if you think about the market that they've built, the big moat they've built around themselves by being the default buyer of used cars, they're now buying something like 15 to 16,000 vehicles a month. They've got a big physical presence across the country. You can't deal in used cars without dealing with them. Even when you speak to the franchise dealerships, they know when you go trade in your car, either you'll call We Buy Cars or they'll call them. So I think it's a solid business model. It's one that will continue to grow. And if you look at the absolute numbers, they actually expanded gross margins over the past 6 months and 12 months. So it's one that's catching good traction, high valuation, but there's a reason why, real volume growth.
And 15,000 cars a month, to be clear, is 500 per day, which is about 20 an hour, which is it's a staggering number. I can't comprehend it. Zwelakhe, your take on We Buy Cars? Certainly it ran hard after the initial listing, a bit sideways now, but the numbers, the valuation for you?
Look, I'm a bit cautious about this company. I think the one area of concern for me is they keep buying cars and they build up inventories, and I haven't seen a convincing trend that they are able to whittle that inventory down significantly. So I do think that what would happen is you would end up with profits being reduced on the vehicles that they bought, and they could have to revise the numbers, their profit numbers down. But I think as Roy says, I mean, the platform where they are able to come up with new products, I think that strategy is still intact, but I wouldn't buy it at this level.
It's a great point. I just went to their website, which I do periodically, and if you do a search with no filters, it tells you how much stock they've got. It used to be, a year ago, it was probably about 8,000 vehicles. It's now 11,908. They've got more space for sure, but they've also got a lot more cars there. So let's stay with you a second. A question came through, Remgro or Reinet, and they're actually fundamentally different businesses in many ways. Would neither, or perhaps both be on a shopping list for you, Remgro and Reinet?
I'll probably lean towards Reinet. I think their pensions business in the UK is quite a good business. I do think that they've improved in terms of their capital allocation, and I do think there is a get into the market, at least to capital markets. So I'll probably lean more towards Reinet than Remgro.
Roy, do you have a preference in either or perhaps neither?
No, absolutely. I'd also lean towards Reinet. I think that whole pensions business, that pension investment corporation business of theirs, plays into the aging population and guaranteed annuities that are prevalent in the developed world. As for Remgro, they're in the process of changing their business model. They want to be the capital provider with industry specialists running businesses. It's yet to be proven. They went through quite a big hurdle when they first started it, but you can see the problem, like with Maziv. Maziv now has way too much debt. And these guys aren't going to pony up to help them, and that's why Vodacom comes in. So I think that that model still has some way to be proven. Management still needs to earn their stripes, so to speak. And so, no, I'd rather be in Reinet than Remgro.
Okay, Reinet, vote for both. Roy, we will stay with you. You must have guessed this one was coming. Sasol's popping up. We finally had the Capital Markets Day. The market liked it. We can say a lot about it, but the market did like it. Stocks up massively since the sell-off in April. Would you be looking at Sasol at current levels?
Look, I think it's important that it comes back onto the radar screens. It's something like a 3 PE. They made a big deal about needing to earn the market's trust and needing to manage their capex a whole lot better. They recognize a lot of the problems that the market's been pointing out. But we're in the show me phase. I think it's early. I think even if it's gone up this much, you still have way to go. If what they're saying pans out, this is probably what, a 2 or 3 bagger to come, but that will take time, and they have to show that they will stick to the path and that the oil price will play ball. So both the oil price and the rand have to play ball, and the strategy has to work, and the carbon tax needs to be sorted. So there's many ands, but it's a good start. Let's put it that way.
Yeah, and I like your phrase. The show me's a part of the business, but it is all those ands. So, Zwelakhe, Sasol, I mean, it's been a horror, but it's getting some momentum perhaps and a slightly better story. Management need to prove it, but would you be looking at Sasol at these levels?
Look, it's cheap, but I don't know if I could buy it for the long term. And I think I'd be a little cautious. There's a lot of execution risk here. A lot of even the rally today is underwritten by the developments around the oil price with the possible strike of Iran by Israel. So we need to be cautious about what is actually driving them. The reset story is fantastic, but they need to execute it, as Roy says.
Yeah, they absolutely do. And then, of course, they've got all the risks of the, as you say, the oil price. I think they said $50 is good for them, and we are ways away from there. But I still remember the negative oil, which I think certainly scarred me. Here's one I'm not sure if either of you know much about. Mutoni Mining, very small junior mining, lots of controversy around whether the share is or isn't being manipulated. Are either of you up to speed and got a sense of if there's opportunity here, or is there too much smoke and best stayed away from?
Yeah, unfortunately, just liquidity and all that just means we stay away. So, no, there's very little value I can add to that.
Gents, question coming through around Pick and Pay. We had a trading update late this afternoon. The question is, the update looked fairly poor, but the stock seemed to like it. Roy, let's start with you. I suppose it's more about moving in the right direction. That is what we saw from that update.
That's exactly it. From very bad to less worse, and it looks to be moving in the right trajectory. And I guess the issue is, how fast are they getting there? And does the environment actually lend itself to such a rapid improvement? The market seems to think so for now, but there's still a lot. They pointed to their core business still struggling. It's getting better, but it's still struggling. So they still need to execute. They still need to deliver. It's early days, I would say.
Roy, does the extension of Sean Summers' contract by perhaps a year, I think it was about a year and a half that they extended it by, does that tell us that maybe this is a longer journey than the quick 3 years they thought it might be?
Well, one thing is for sure, they didn't want to have a transition in the middle of this. So it's exactly like you say, it's a longer term thing. He needs to execute on the actual operations and then execute on succession, both of which are very incredibly complicated, risky processes to undergo, and you don't want to do them at the same time.
Zwelakhe, Pick and Pay for you and the update, would this be a stock? Some folks like it for the Boxer exposure. Of course, we can get that direct. Would Pick and Pay be a stock that you're looking at?
No, not at this stage. I think there is a lot of activity or execution risk that's in this business. I think what we've seen is corporate restructuring. We now need to see changes at the ground level, particularly the value proposition to their customers. I think there is still no clear message that's going out as to what Pick and Pay stands for to customers' mind.
Yeah, I get you on that. I got a great question coming through. I'll read it almost in its entirety. I'm fairly young, starting my first job, putting aside some money every month to build a very long-term share portfolio, think decades, holding until my retirement. When I look at my core portfolio, which I'm thinking the likes of the Clicks, the Shoprites, the Capitec's, how much does price matter? Or can I take the view that if I'm really going to hold for 30 plus years, less of a concern? Zwelakhe, your take on it. I like it because particularly when I was starting investing, the amounts were small. I wasn't much of a boffin on understanding price. And man, 30 years ago, those stocks were all cheap. Does price matter if you've got that type of duration? Or is it always going to be valuation important?
Well, look, price matters always, but I think the longer you stay in the market, I mean, you get rewarded even when you made a poor price decision, especially if you're well diversified at your portfolio level. So I think for the long term, you have to look at the strategy. I mean, if you're talking Capitec, I like that stock because long term you can see the execution, this clear cut track record of delivery. But you need to look at things like that for the long term. Otherwise, you have to pay attention to price quite acutely.
I get your point on that. Roy, your take on price versus just using the time in the market?
I think when you use time in the market, you're better off doing it through a well-diversified vehicle like a fund or an ETF. That allows you to dollar cost average. So whether the price of that goes up or down, you keep on investing. Ultimately, it works out because the diversification forgives you your losers and rewards you for your winners. So from that perspective, absolutely. But when you're talking about individual stocks, price is incredibly important. You make your money through your in price, not through your out price. If you buy something that is already trading at a high multiple relative to expectations, you're paying away all the future and you're hoping for an even better future. And you generally will underperform from that perspective. So if it's a fund, keep buying. If you've got 10, 15, 20 years in your horizon, you will end up winning. But if it's stocks, you've got to do the work. The in price is where you make your money. You've got to be very astute around that.
I like your point about the fund. You also remind me of something my grandfather taught me many, many years ago when I was still a teenager, which was the only thing I have control over in the market is the price I pay. Once I've paid for it, everything's beyond my control. A question coming through, moving offshore, ASML, it's been under some pressure, but I like the story. And ultimately, silicon chips are the future, even without AI, but that adds some shine to it. Rory, would you be looking at ASML at this point?
Absolutely. It's been incredibly volatile now, and there's been quite a bit of a story around it. But I think that whole semi-world is incredibly important to look at. The one thing about it is we have to remember these are commodities. They're highly cyclical. They start out from very low multiples. They go up to very high multiples. You can buy it at the wrong price. The capacity globally is a massive issue. You have to really be careful about it and not just hope to ride that cycle. But over time, I think it's definitely a sector you want to have a participation in.
Zwelakhe, ASML for you?
Yeah, I think the price is reflecting what is already known to some extent. I think one also has to look at it from a value chain point of view that people buy machines to manufacture semiconductors. So TSMC and those guys would have bought the machines and they are producing with those machines, and that's where the money is. And if you are going to buy SML now, you are buying for the next cycle, that the next upcycle. For what we have now, I believe that it is fully priced.
Yeah, I see your point. We need new fabs being built so that the ASML get the phone calls to say, please send us your fancy ultraviolet machines. Zwelakhe, let's stay with you. Another question coming through offshore. UnitedHealth, been under massive pressure recently, last year or so. Is there opportunity at these depressed levels or should I wait? What's your take on UnitedHealth?
I wouldn't go into it. I think that's issues of governance, there's issues of regulatory risk that they could be taken on. I would wait at this stage. I think I'm not comfortable at all. They have made some mistakes, I think, in terms of how they service their customers, and there may be litigation that follows from those things. So good business, but I think some corporate governance issues may arise that may cause problems.
Roy, UnitedHealth, I mean, it is a regulated space which adds, it adds a bit of a moat, but it adds some risk to the process as well. What are your thoughts on UnitedHealth?
Yeah, just from the regulatory side of things, the fact that it's involved in that whole Medicaid in the US, and that's always going to be a massive political football, and the governance issues that they're going through right now. I think it was a very popular stock for a long time. I mean, I saw a statistic where there was only one sell analyst before this whole collapse, and there were 26 buys. So it just shows you how much of a consensus it was. But these issues that Zwelakhe is mentioning, the litigation, the issues around the CEO who got shot, the issues around the nursing homes and stuff like that, that's not going away anytime soon. And once a company catches that cloud, it's very difficult to unravel from it. So this isn't that, it wouldn't be one that I see an investment case for over the short term.
Yeah, and it's also, it's just taking executive times as they fight all these fires. Roy, we'll stay with you. Great question. Local market is in bull phase with all-time highs. Global markets are mostly at or around all-time highs. Surely we should be looking for an asset manager. Which would be your preferred, either locally or globally, in terms of that?
So if an asset manager is probably correct. And Zwelakhe is laughing because I would say 91 or Sanlam. But here's the thing. I think if you look at a company like Quilter is a platform. It services a lot of asset managers and it's a wealth gatherer. So flows come into it and they allocate across asset managers and other products. That's how the industry is going. And in the future, you're not going to have standalone Sanlam Investments in Benguela. You're going to have platforms such as this and big sales forces that go out there to advise people as to where their money goes and to slice and dice and everything. So I think Quilter is the one that you should look at right now. On the other side, something like a 91, which has got a big emerging markets focus and has sold off quite considerably over the past couple of years, could be one to look at. But I think from a pure structure perspective, Quilter would be my bet.
Zwelakhe, what would be yours in that space?
I'd take 91 without doubt. I mean, I think it's trading at about 1% of AUM, Coronation's 2%. And I think if you look at their fee margin, they're not too dissimilar from Coronation's. So I do think that they've got a very good strategy of rolling out their niche products in global markets. And they seem to have been successful. I mean, they've got a team of 39 BD people. I thought it was remarkable for a fund manager. So I think they'll continue to grow.
Okay, 91, some Quilter. Let's go to stock picks. Zwelakhe, you've done something that's never happened to me in over a decade on the show. You named a company which, when I looked at it, I'm like, I don't know what you're talking about. Zootis Inc., and I'm probably pronouncing it wrong. Help us with the story.
All right.
Yeah, Zootis is basically a vaccines and pharmaceuticals business that is focused on animals. So companion animals, about 2/3 of the business, and then you have livestock, about 1/3. And essentially, they dominate that space. I think they've got about a 40% market share in the US and globally around 15%. So they are a business that has been growing ahead of the industry, good margins because of their scale. And I think that while it's trading at a slightly elevated price to peers like Elanco, it is actually quite a high quality business.
And I said it actually came out of Pfizer at some point. Okay, I had, as I say, never heard of it. Roy, you kept my life nice and simple. Astral.
Yeah, just listening to management this week and looking at the commodity prices and everything, I think there's a lot to happen there. I think margins at a cyclical low. I think prices have begun to rise. It's a well-managed business and the momentum is with them. I don't think it's expensive yet. So I'd be very positive on Astral and the chicken stocks across the board.
Okay, there's a couple of, Astral certainly the big one in that space, and of course under new management, but they've been around for an age, and certainly I think the results showed that there's a lot of things going in their favor. But we'll leave it there. That's all for Stockwatch tonight. Thanks to our guests, Mutooni from Sanlam Investments, going with Astral, Zwelakhe Mnguni from Benguela Global Fund Managers, going with Zoetis Inc. Up next, the close. Stay watching.